Hi there, Tom Jeffries here on HowStreet.com's channel and YouTube. Good to have you with us. We're at the Hotel Vancouver. It's the Agora Wealth Symposium 10th annual. It's called the Decade of Reckoning. One of our regular guests at Howe Street, we call him our currency expert for good reason, is Jack Crooks, Chief Trading Officer with BlackSwanTrading.com. Mr. Crooks not only provides advice to investors around the world, but also manages money. He's visiting from the, as we call it, the center of the universe, Palm City, Florida. Good to have you West Coast again.
Thanks, Tom. Happy to be here.
Here we are, July the 21st, and everybody and their dog is piling on the bandwagon. The U.S. dollar's finished. It's over. What say you, Jackson?
Well, you know me. I love to be a little bit out of the mainstream. I'm happy to be out of the consensus because ultimately that's where you're going to make the most money. Right. We're a little bit on the fence here. I mean, the arguments, I think, building against the dollar this year are a little stronger from a fundamental standpoint than they were last year. But the reality is the dollar's not finished. The dollar's still the world reserve currency. Right. There's still no alternative. Right. As you know that out there. China's talking a big game. Yep. Russia's talking a big game. But the reality is China's buying more and more U.S. bonds. There's no other place to hide here. And in the system, I doubt there's going to be any change there. So from the big picture, giant macro stuff, I think the dollar is safe. So I think it's just a matter of how the global economy plays out here.
Well, we're a calm doll here in Canada. We're tied to petroleum, we're tied to mining, and the Canadian dollar's been doing pretty well. A lot of the other calm dolls, are we going to maybe head to par, the Canadian dollar, with the Greenback? It
really is a function of what goes on from here forward. If we get another major risk bid in the global economy and China disappoints, again, because China's the driver of the calm dolls, if that happens, the Canadian dollar, the Australian dollar, New Zealand could get hit. They've had a huge run. But I'm on the fence here, and as I said, I'm rarely on the fence. Right. If the U.S., because of the fact that they're trying to stimulate the globe with the dollar, if they decide that this is a implicit and explicit policy to try and pump up global markets, then I think Canadian dollar has a chance to go to par, but I don't think we know that yet.
Canadian, of course, are really nervous, the central bank, because that, of course, crushes our exports because we live on a lower dollar in the U.S., but that's for another day. You were recently in China in the last year. I'm reading reports about everybody saying, decoupling, China's the future, let's go for it. Yet there seems to be rumblings under the covers. You're not so sanguine about China, are you?
We're not at all. Number one, because we can't trust the numbers in China. They can say whatever they want. It's like trying to trust the numbers in Russia when Brezhnev was in office. It's about the same quantity. Right. And number two, the real driver of China growth over the last several years, and they're keyed for it, has been exports. Their exports are falling about 25% a month on average. They're not importing that much, which goes to the point that the domestic demand isn't there. So if the exports don't revive in China, no matter what they're doing, we think they have trouble. And that's why we're very nervous about this 8% GDP. Sure, they could have 8% GDP, but people have to remember that China has such a huge investment quotient relative to GDP. But if the driver of real growth and jobs is exports, and that just ain't happening, I'm still concerned about China. We feel it here on the West Coast. You could look at English Bay, Jack, the container counts are way down. We look at the global shipping index, the Baltic's on the floor. Are we facing, do you think, in America as we go forward here, so the same experiences we had in Japan, grinding along, recession, slow growth, banks, zombies, et cetera? Is that, do you think, what's happening right now? I think very much. Yeah. And I think we're seeing it in the numbers. If you look at the numbers, again, back to exports and demand. The reason exports have tanked globally is because the consumer has gone in his shell. They're saving. You look at the current account deficit in the U.S., everybody's dollar boogeyman, remember? Right. This time last year, the deficit was getting worse and worse, therefore the dollar's going to fall off the cliff. Well, nobody talks about the fact that the current account deficit has improved 50% in the last 6 months as the dollar has gone up. Wow. The game has changed out there in the global macros, with people saving and not consuming. In the U.S. being a 70% consumer market, you're exactly right. I think we face many years of subpar growth. Are you going to be sending any notes and congratulations on Gordon Brown's shepherding of the British economy, Jack? Well, I think that the voters are going to do a good job of that in the UK. Yeah, they've been having a heck of a time in the UK, the account deficit, et cetera. So let's talk about cross trades. Are you trading against the pound right now? We are. We're trading pound dollar. We probably should be trading something else against the pound of late. Right. But ultimately, we think the UK, the pound has to break. We just see the capital racing out of the UK for a lot of reasons. Yeah. Tax rates, manufacturing in trouble, financial services still in trouble. Yeah, we see Angela Merkel and Germany sort of waving the red flag, saying we got trouble right here in River City. You don't like the Eurozone very much over at Black Swan, do you? Long term, we don't. Near term, the euro reflects weakness in the dollar. It's kind of the mirror image of the dollar. If the dollar's in trouble, the euro is the key alternative currency. But if you look underneath the hood of the European Monetary Union, you see a whole lot of ugliness. You see structural deficits as far as the eye can see. You see terrible demographics in Europe. You see inflexible labor markets that the euro has not solved. You see a lot of squabbling in individual countries, and you see rising incentives for the core countries to actually leave the monetary union. Again, it's a low probability bet at this stage, but in this market, because German exports are just getting killed, just as China's are, the chances of the European Monetary Union actually coming apart, in our view, are rising. So we think it's just a structural time bomb if we get that, what we just talked about, many, many years of subpar growth and no rebound in exports.
What's shocking to me, and you've talked about this at your Currency Currents, which goes on free around the world, is the number of people in the European Union, and some of the, say, Club Med countries, Eastern Europe, went out and started building booms, and based on euros or borrowing at Swiss francs, and now it's coming home to roost. Sounds pretty ugly. Ugly, ugly, ugly. It
is ugly, and the reality is, since the G20 meeting was that April or what? I forget when
I lose track.
But the G20 meeting, since then, they basically, the IMF has pumped $1 trillion into Europe to save the banks. That's quietly gone into the banks. The banks have huge exposure to all those countries you said in Europe, Central Europe and Eastern Europe. We saw Latvia, one of the smaller countries there, concerned about possibly devaluing, and we saw the Swedish banks tank 20–30% in like 2 days.
Yeah.
That's an example of the depth of leverage they have in all those markets, and you factor in Hungary, Czech Republic, Ukraine,
Bulgaria,
on and on. You know, it's a time bomb, and the ECB is doing what they can to quietly keep that under wraps. But it's a ticking time bomb.
The other ticking time bomb we watched with great interest, you lectured on the yen carry trade over the last couple of years. Do you see that the yen gaining strength, or are they again going because of their current model at deflationary and GDP dropping? It's going to be a tough run for the yen?
You know, we thought that early in the year. We thought sooner or later that the yen was going to start reflecting very ugly fundamentals. As you said, they're back in the grips of deflation. Industrial production is just getting killed. Yeah. Their exports are getting destroyed just like everybody else. But the reality is the yen has been rising again on risk. And what we think is happening, we think some of the Asian money is starting to move to the yen that would normally come to the dollar to hide. Because despite what's happened in the Japanese economy, the yen is still moving up on risk as the economy gets worse in Japan, and that tells us some Asian money is just really starting to hide there again. We don't think it has anything to do with the carry trade at this point.
Risk aversion was the key theme for the last 6 months, especially after November, is crumpling of everything. Do you start to see risk coming back into the market just about from Forex right across to options and everything else?
You know, I think that's exactly where we are, and that's why we're a little bit on the fence. If risk comes back in this market, we think the dollar can run. If it doesn't, and we continue this green shoots, you know, everything looking a little bit better, therefore buy risky assets, you know, I think the dollar's in trouble and those commodity currencies do fine. But we are right here. You know, we're right here. Bernanke talked slightly today about taking some of the juice out, and sure enough, stocks responded.
Right.
We'll see.
You have also, at Black Swan Trading, started to manage money. For people that don't understand, what does managing money mean anyway?
Managing money just means that we actually physically take the money and make the discretionary trade for people. Right. Okay. We use a trading model in our managed money, and we charge a fee on profits. Right. If we don't make profits, we don't make money because we don't charge a management fee.
So like having your skin in the game.
Right.
And also too, for people watching around the world, we're not just talking Americans. Canadians in some provinces could work with you at Black Swan if they wish.
Absolutely, we'd love for it.
Good. Jack, it's always a real treat to have you on the West Coast. By the way, Jack and his son JR work on a different number of products. Check out blackswantrading.com, and I think you'll enjoy Currency Currents. You'll see published every day here on howstreet.com. Jack, glad to see you back on the West Coast. We're looking forward to your speech. Thanks for your time.
Thank you, Tom. I appreciate it.
Jack Crooks, Chief Trading Officer and President of Black Swan Trading from the center of the universe, Palm City, Florida. JR and Jack here are speaking at the Agora Wealth Symposium here at the Hotel Vancouver. For Mr. Crooks and his team at Black Swan, this is Tom Jeffries at howstreet.com's YouTube channel. Thanks for listening. We'll see you soon.
Comments made on How Street Video and howstreet.com are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at howstreet.com. How Street Video is a production of How Street Media Incorporated.